Hi, welcome to the Market Alert for Wednesday, the 2nd of October 2019. So Bitcoin, according to the independent and experts, price on course for record high despite cryptocurrency crash, experts claim. So let's have a look, see what happened yesterday. And we'll start off with the daily chart, and we can see the 200 bar moving average is a bit of a problem. The market banging its head against this yesterday. It traded above it and is currently trading below it. It will need to drive through this on significant volume if prices are to move higher. Otherwise, we are likely to see a retest of these lows. And in between this, we will also likely to see this as well, a test of the 76% retracement, 7891. So let's keep an eye on those today. Always look at the bigger picture. It is so important to do this, as you can't trade intraday unless you know where you are in the bigger picture. In the 4-hour, we can see that the 50 bar moving average is forcing prices lower as well. You can see the trend is certainly down there, and prices stopping at the 20 bar moving average as prices head towards an entry price for the 4-hour chart there. We'd love to do that quite rapidly because we only have 3 bars with which to be filled. So I'm just going to remove this for a second because, again, what I would be inclined to do is to draw in this on this chart, even though it's the same price with the 76%. It's just a bit easier to see there. And then finally, yesterday, we saw the market a bit choppy yesterday. Prices coming down to the 50 bar moving average. Let me just grab a bit more information here. You can see that the market is on the buy side there. We had a short there that traded down to the scalp. I'll just grab the trading tools. You can see there trading down just to the scalp area before finding support, and then moving up. Like I say, we're on the buy side in the 15-minute at the moment as prices are above the 200 bar moving average. Again, just trading to the scalp. So a very tight range yesterday. We then had the market go short again, but right at where the buying came in previously, you can see there just peaks above the average and finds support. Prices then bang the head against the 50 bar moving average and move lower. However, in this area, I'm just going to delete that so I can free up a bit of space. If we go from the low to this high here, you will see prices fail to break the 76% retracement, which when combined with the entry scalp and the trade markup there, you can see that we've got a problem, because if the market isn't breaking the 76% area, then it's likely to move to the upside. And also given that the market is also long as well. So it's a case of having to make a decision to get out of the trade unless you wait and then you take the buy side. Whoops, let me just redo that, it's in the wrong place. The buy side there, reducing the initial risk of this first trade, or the entry points here to show you there. So that reduces the risk significantly by doing that, or making the decision to get out because the market is failing to move lower from that 76% retracement there. So prices run up, and again, not much in the way of range yesterday, and then prices put in another sell where we get the market coming back lower, but then finding support and trading sideways. So a bit of a mental test yesterday as prices were range bound, and then overnight you can see now prices also breaking the 200 bar moving average at the moment. So back on the short side on this one, which is basically put it back in sync with the daily and the 4-hour there. So yeah, we could do with a bit of liveliness in this market, a bit more of a trend, a bit choppy yesterday, but that's the first day for a few days. Meanwhile, in the stock markets, we've got global growth for yesterday. being the factor for the Dow moving lower. And that's unusual because, as I've said before, that the market's not really taken any notice of any economic news items. But given the backdrop, as I've also said about the implied volatility yesterday, pointing that we could see prices moving lower because of that red appearing in the implied volatility and the previous shakeouts that we've also noted of late, and how this is happening a lot more than in the past as well. So the implied yesterday, surprisingly, only picked up slightly. So very odd. I was expecting this to come out around about 18 and only came in at 1560. So maybe a bit of a bounce to the upside today. So let's have a look at what the Dow did yesterday. So you can see in the daily charts, we sailed straight through the fib retracements we've got, and also the low to the left, and straight down to the 50 bar moving average there. So the manufacturing figures yesterday, not that bad, but obviously bad enough to cause a shakeout in the market there. And if you look at the 15-minute chart, you'll see that prices started to move higher off the 200 bar moving average, started to move, and then all of a sudden, I would not have seen this off what I would call a regular economic news item for a very long time, but then markets just gapped and sailed lower, which I say I've not seen that for a long time. I think there's more going on in the background personally. The liquidity problem in the banks is actually getting worse as well, and it's not being reported. You have to really go and look for this information. I suppose they don't want to create any panic. But the banking system in the US has got some serious liquidity problems at the moment, and yet it's not being reported. But at least the market, if this is what they're hearing and it's not being reported by the mainstream, is actually sending prices to the downside. So we see a big sell-off with the manufacturing figures being the catalyst for this. It may be a case that you've got institutions who are aware of what's coming with the banking sector and are jumping ship on other news, because I've not seen it before where a couple of point change in manufacturing figures have sent the market stumbling, or not stumbling in this case, a major sell-off of 428 points just on an economic news item. Not seen that for a very, very long time. However, prices managed to bounce before the close, but then end up making a new low just after, and overnight prices are sideways to higher there, which we can see in the daily chart, finding a bit of support there at the 50 bar moving average. A bit all surprised to see a bit of a bounce today in this market as well. What have we got? ADP unemployment change today, and crude oil. Friday we must have the big numbers, so we'll keep an eye on that as well. So a bit of stability in the market today, unless of course something else creaks in the banking sector and behind the scenes. Also yesterday, pound rallies on reports EU ready to offer Johnson major Brexit concession. Whether that's to do with the backstop, who knows, wait and see. But I wondered what all the activity was in the pound yesterday, so let's have a look at this. It just shows you how the markets, we started off lower, we're banging heads against the 200 bar moving average, and we get the short trades eventually. The first one, the market turns around and moves higher, and we also see prices trying to move higher as they go through the 200 bar MA with professional buying. So the first trade, a losing trade. Second trade picks up the loss, and then the market trades again above the 200 bar moving average, but struggles with the DP level, and then closes back below this with a sell signal. The market sells off to the downside, not a great deal, just under, let's have a look actually, there's more there. Let's have a look where the maximum was on this. Trailing the stop down, we've got all of these lower highs. That one should be above. and then down to this level here. So we've got it. Let's have a look in here, and then just grab this. This is the easiest way to do it. To give you a ballpark figure there. Yeah, 68 points or pips as its currency. I see the market lower there. I didn't trade the pound yesterday, which is why I'm just having a look, seeing what was available there. Well, to be honest with you, I wasn't expecting a lot of movement with the Tories being at their conference, but obviously this news coming out in the afternoon from Juncker, and sending the market to the upside there. Relief for the pound that there could be a deal instead of a no deal. But overnight, prices again below the 200 MA, and a trade in progress there, which again, not being able to do because I'm busy recording this at the moment, which is a bit of a shame, as we've got a bit of volatility back in this market. And yeah, that's about it for this one. Is there anything else that I've missed? I think the 10-year yesterday yield was more or less the same. Let's just drag this in, have a look. Yeah, it just lightened up a bit, but definitely global slowdown is taking effect, and this has been forecast in this alert for a long time now, way back in May. I started talking about recession next year, and it's definitely going to come, that's for sure. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.